Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, November the 8th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. And just to let you know, these videos are for educational purposes only, and your results may differ from mine. And as you begin your trading week this week, keep in mind your risk management. Make sure you never lose more than you're willing to lose on any one single trade so you stay in the game. And also, you got to keep your head in the game. Brain management. Don't fall to the fears or regrets so you will not experience any pain. Money management, the biggest one. Take profit before the market takes it back. Right now, with a lot of uncertainty, you can see the market move 20 pips, in a minute. If you're on the right side of that trade, you better take it before the market takes it back, because it could come back 40 pips against you just as quickly, if not quicker. So far today, we bring up the weekly chart. We can see we've got plenty of gaps that haven't filled. So take your pick, which pair you want to trade. Right now, you see that the pound dollar gapped up, filled that gap, broke out of the previous week's high right here. Right now, it's up 8 pips, and it's actually 8 pips off of the current weekly high. So there's a potential to make 16 pips on that break. Once again, simple horizontal line breaks. And as you can see here, as we're putting in the opening range for the day, we are in that opening range for the year, first day of the year. We're only 61 pips off of that open there. And as you can see here, past couple of months, we came down and now we broke that high here of that last month. And it looks like we might try and get back here. It's possible to maybe we even break the high of the year. We'll just have to wait and see how it all plays out. Once again, 60 pips off of that yearly open. 226 pips above the monthly high. Now, we just started the month last week. Wouldn't it be nice if you had taken that trade there in the buy zone? And as you can see here, that last month was an inside bar. We broke the high. Now we're 10 pips above it. Lots of inside bar, all that blue you see here, the blues and the grays. Those are inside bar trades that you might be able to take advantage of. And so far today, only one pair over 100 pips, but we're only 6 hours into the trading day. So there's still plenty of time left. Pivot point here, we missed that pivot, as you can see. So this trade right here for the pivot faders wouldn't have been a entry, but for those of you who just take the entry and you don't worry about any bias at all, you can see it would have paid off and paid off nicely. Rats, the range is large enough at 45, but I usually like to see it 60 or higher. I wouldn't be looking for any red rat reversals at this time, but that's just based on experience. I like to see the zone be closer to, say, 80, or the range for the day to be closer to 80 or more. And you'll see that, and you'll know why when I bring up those the range chart with the smart range indicator. I think it's on this portfolio, or profile rather. Weekly pivot 1.30, call it 61. You can see we're way above it. We may or may not hit it this week, just depends. Like it's a lot of volatility. Once again, showing the weekly pivot so far, just opened the day, hasn't hit it, but we took them all out last month. And then on the daily, We took all the dailies out. You can see we've had a couple of missed pivots in a row right now, so price would have to turn to pick up those pivots. Wick zone, price was in the wick zone, out of the wick zone, back in, back out, back in, back out. Price just doesn't like staying in the wick zone. Once again, showing the previous week's high. Busted through it, and you can see here on the ranges. So on the daily, you can see at 85 pips, that's only at the 20 percentile. So you probably don't want to start looking at reversals until 100 pips or more. Simple trading chart, you can see a 3-ball. There was a trade here, but you can see from the spread dot, the spread seems like it's maybe a little on the high side at the moment. I don't know if I'd be so eager to want to take that trade. And once again, looking at another trading chart here on the M1. But usually on the semaphore chart, we usually like to show it. The H1 here. Simple horizontal line, price action trade going with the H1 candle color at the line. You can see at the open session here, there was a nice pop here. But then it seems like we also had a nice little pop this way. But it looks like the action's kind of dying down, probably waiting for the London boys to wake up. And let's see, I picked up a few new trader subscribers on YouTube. Welcome aboard. If you have questions, make sure you ask questions in the video comments or on one of the forums or the Facebook group. But please don't fill up my inbox with trading questions or programming questions, indicator questions. No, put it out on the forum so everybody benefits from the Q&A. Somebody asked me about MT5, and yes, I don't have any freebie MT5 indicators per se. They're donational because I just hate MT5. Why they made all those changes, I don't know, but I'm not liking it at all. So I'm pretty much sticking with MT4. Probably will have some new indicators out for the donationals. I think I have a couple new freebies that I need to put out there, some updates. In fact, I think there was the update here to the semaphore indicator where we have the range and we also have the distance. So you can see here from semaphore to semaphore, it's a 100 pip range. Now the question is, when you see a 2-ball or a 3-ball, do you have what it takes to wait and stick in that trade for a ball to appear on the other side? And take some nice profit? Do you have what it takes? It's tough. It really is. Even when we're down on the playing, trading on the 1-minute chart, waiting for the 3-ball or 2-ball. It's just so much movement back and forth, and we're so used to taking 1 or 2 pips off the table. Sometimes it's really hard to stick in the trade and maybe pick up 10 or 20 pips waiting on that ball to appear. Sometimes we get it. Sometimes we luck up and get it, but for the most part, we've seen it too many times where we could be up 5, 6, 7 pips only for the market to move price all the way back down and maybe take us out at break even +1. So when you're stacking pips, 2, 3, 4 pips at a time, they stack up, especially, if you're taking 10 to 20 trades a session. I mean, 20 times 2 is 40 pips. 20 times 3, 60 pips. They stack up. Let's see, there was a trader, I think another one of the new traders. Um, he seems to be hesitant because I guess he's looking for perfection, something where he knows he's going to win. And I'm here to tell you, there's no such thing here in trading. You have to just be able to roll with it because some of the skills in trading have more to do with your your self control, your self discipline, self management, um, brain management, more so than the trade. Because once you put the trade on, in essence, you become a spectator. You're watching price. And depending on what price does, you react to it, of course. And hopefully, you're just executing your trading plan. But for the most part, you're just a spectator watching. There's nothing I can do to make this price go a certain direction right now. Nothing. I can't make it go up. I can't make it go down. So if I'm long, it'd be nice if it goes up. If I'm short, it'd be nice if it goes down. And that's just it. Personally, I'm thinking the dollar might tank, but any of those biases that I have inside, I have to set those aside when I start to trade because I might think it's going to do something, but if it's not doing what I think it's going to do, it's doing what it's doing. I better recognize what it's doing and act accordingly. So, I mean, if you want to talk about a skill, it's being able to recognize when price is going up and when price is going down. You might think that sounds simplistic, but you'd be surprised at how many people trade just the opposite. They see price tank and they think, oh, it's going to bounce here. And then they go long only to see price continue. Trades and, I wound up having to trade myself out of a jam. But then sometimes if I just sit on my hands and just wait, then I can have easier trades. A perfect example would be right here. As price was going down, might think, oh, maybe it's going to go back up. But sometimes just let that hourly candle close. Just let it close. And then when you see the next hour come down and then turn around, then maybe you jump in. So sometimes it's just better to be safe than sorry. I mean, once again, right here, you see the hours going down. Don't trade against the H1 candle color. If it's red and you want to go long because for whatever reason you don't want to go short, then just wait. Wait for that. Might have to wait 59 minutes. You might have to wait 5 or 10. But just wait. Let that candle close. And then you can trade the next candle when it turns green. I mean, why go through the stress and agony? I mean, it just really doesn't make sense. But so many traders fall prey to that. And then, of course, the indicator of the day, of the week, of the month. So many people are still writing all these new fancy indicators. I saw one today, some kind of moving average, and, it's a squiggly. And oh, I just kind of have to chuckle. But that's just my bias against the squigglies because, price goes up and down and I can tell which way it's moving as it's crossing a horizontal line. Oh, if it crosses above the line, it must be going up. If it's crossing below, it must be going down. And that's pretty much all it takes. So, fellow traders, I hope you had a fun and safe, enjoyable weekend. And now you're back ready to trade. So, when you sit down at that trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So, go out there and drain the banks. And once again, if it's your first time here, welcome aboard. Click subscribe, click like, share the video all over the place. This is the Rumpled One, over and out.